Now we're going to look at the flip side of things, making bearish entries on key resistance rejections and key losses of support. So you will find throughout the rest of your technical analysis education that the backbone of technical analysis and knowing when to make decisions, entries, and exits, being able to identify key resistance and support levels is pretty much one of the most important things that you can do, and it will become very easy with practice. You'll be able to just glance at a chart and be able to pick out support and resistance levels within seconds, really, once you do it time and time again. So looking at bearish entries where resistance is, we just looked at where resistance can be found, its previous price levels, moving averages, psychological levels, and also the upper Bollinger Bands. This is a key one, especially on the daily time frame. Time and time again, you will see a price get to the upper Bollinger Band and reject, or even break above the upper Bollinger Band, but be unable to close the day above that level. And it pretty much requires a big increase in bull volume in order to enter breakout mode, which is when the price is above the upper Bollinger Band, and that turns into support. So time and time again, you will see the price reject from that level. And with all of these moving average and psychological previous price, all of these resistance levels, the indication is going to be a move up to that level. We'll get some signals that the bulls are tiring, either decreasing bull volume on an uptrend. We'll see a bearish reversal candlestick form after touching these resistances. There will be all kinds of indications, but knowing the levels at where to look for the bulls to tire and get rejected has you ready to make that bearish entry. Other bearish entries are found when key supports are lost, and we know support levels are previous price history points, moving averages, and psychological levels. And it's the same thing. If we see a key support hold and hold, and then it eventually breaks and the candlestick closes below that support on whatever time frame we're looking at, that is the bearish signal. And from there, we'll look for an increase in bear volume to give us confidence in the move to the downside, and other signals. Technically speaking, weak candlestick closes near the low of the candlestick. All these little subtle clues that we can pick out by looking at a chart and give us confidence in our trade.